Do you agree with the sense that we have seen peak tariffs already, that it's not going to get worse from here?
Well, I think my guess is actually it's all relative to where we are starting point. I don't think that we're going to go back to the 140 plus of tariff rate that we have seen, at the height of this tariff war between US and China. Yes, I mean, the negotiation is ongoing. It looks like the current news flow, it looks like this negotiation is not going as smoothly as what it wanted to be. But also, I presume that it's a reality that both countries will need each other. So my guess is that if the negotiation doesn't go smoothly, it's possible that we see slightly higher from here. It's possible, but I really doubt that we're going to see the kind of 100 plus, which is effectively an embargo, and that's not going to work for both parties. And that's what our belief is. Yeah. So yes, I think to some sense we are not going to go back. We're seeing the worst, and going forward we should see could slightly worse than current level, but it's not going to go back to the old level that we've seen.
Yeah, which is what pricing has been suggesting, right, since April, now that spreads have come back in. But with the 10 still at 440, though, what does that tell you?
Well, I think that we are expecting that the Treasury curve is going to be steep. I think this because of what's happening now. But to some sense, I think if we think looking maybe 6 months forward, we do expect that there's some room for the Treasury to start to come down from current level, as we do expect that Fed will eventually start to cut rate. Our forecast is that the first rate cut will happen towards the end of the year, and one that should actually help to anchor the front end, and also that bring down the Treasury curve, the long end. Yeah. So, but the curve is steep, but I presume from current level we do see some room of things coming down from this level. Yeah. Coming back to the credit, to Asia credit, you're right. I think Asia credit has seen a widening after the April, but we have almost recouped all the widening that we have seen, and that's really the important thing. I think it's also showed that Asia credit remain quite resilient. The tariff is definitely a risk that we have to contend with, but the direct exposure for Asia credit to US tariff direct exposure is quite limited. And those who have exposure tend to be very high quality name, so that's can mitigate the impact somewhat. And the impact that we have to deal with is more indirect. The implication for the slow growth, and these are the things that we deal with. But that is the second order impact. What is really important for Asia credit right now is that the technical support is very strong, because the demand is actually quite strong because of the liquidity is still building up in the region, and those things is helping to absorb the any volatility that you see.